Hey everyone, welcome back to Corporate Decoder. Today, the iShares Bitcoin Trust ETF, or IBIT, has filed its quarterly report, and I'm seeing some wild swings that really tell a story about the crypto market. Quick note, this is not financial advice, just my take on public filings for educational purposes. The price of Bitcoin has been incredibly bumpy, and this report shows us exactly how that roller coaster is affecting the big players. This filing is a 10Q, which is basically a quarterly financial checkup for publicly traded companies. It gives us a snapshot of how the iShares Bitcoin Trust ETF, or IBIT, has been doing financially over the last 3 and 6 months. The big picture here is about how the trust is handling the crazy ups and downs of Bitcoin's price. Let us dive into the trust's financial health. Looking at the statement of assets and liabilities, we see that on the 30th of June 2026, the trust's main asset, which is its investment in Bitcoin, was valued at about $43.4 billion. That is a significant chunk of change. However, compare that to the 31st of December 2025 when it was worth almost $67.5 billion. That is a drop of over $24 billion in just 6 months. Ouch. This directly impacts the value of each share. On the 30th of June 2026, the net asset value per share, or NAV, was around $33.48. But go back to the 31st of December 2025 and it was nearly $49.61. That means each share lost about $16 in value over those 6 months. Imagine holding 100 shares. That is $1,600 gone just from the drop in Bitcoin's price. Now let us look at how the trust made or lost money, or in this case, mostly lost money. During these periods, the statement of operations shows us the nitty-gritty. For the 3 months ending the 30th of June 2026, the trust had a net decrease in net assets from operations of over $7 billion. Most of this came from unrealized losses on its Bitcoin holdings, which is just a fancy way of saying the value of the Bitcoin they hold went down. The biggest hit here is the net realized and unrealized gain loss. For the 3 months ending the 30th of June 2026, this line item shows a massive loss of over $7 billion. This is mostly due to the value of Bitcoin falling. When Bitcoin's price drops, the trust's holdings lose value, and that shows up as a big unrealized loss. There is also a realized loss from selling Bitcoin to cover redeemed shares. For the 3 months ending the 30th of June 2026, this loss was over $1.5 billion. This happens when the trust has to sell Bitcoin to give investors their money back when they redeem their shares. If the price of Bitcoin has dropped since they bought it, they lock in a loss. The statement of changes in net assets shows the movement of money in and out of the trust. For the 6 months ended the 30th of June 2026, we see a net decrease in net assets from operations of over $15 billion. That is a huge loss. On top of that, there were capital share transactions. Contributions for shares issued brought in over $7.7 billion, but distributions for shares redeemed took out over $6.6 billion. Overall, the net assets of the trust decreased by about $14 billion during the first half of 2026. Let us dig into the actual Bitcoin activity. In the 6 months ended the 30th of June 2026, the trust purchased over 157,000 Bitcoins. The cost for these purchases was about $12 billion. That is a lot of Bitcoin. However, they also sold a significant amount of Bitcoin. For the 6 months ended the 30th of June 2026, they sold nearly 193,000 Bitcoins for share redemptions. The cost of this Bitcoin sold was over $15.6 billion. This resulted in a realized loss of over $1.7 billion from these redemptions. This tells us that when people wanted their money out, the trust had to sell Bitcoin, and because the price had fallen, they took a big loss. This note here is key. It is telling us that when shares were redeemed, the trust paid out Bitcoin that it had acquired. The value of the Bitcoin paid out was over $5.4 billion, but the original cost of that Bitcoin was almost $6 billion, meaning they realized a loss of over $460 million just on those redemptions. The schedule of investments gives us a clear picture of what the trust holds. On the 30th of June 2026, the trust held 734,261 Bitcoins. The cost of these Bitcoins was over $61 billion, but their fair value is only about $43.4 billion. That is a difference of over $17.6 billion between what they paid and what it is worth now. When it comes to valuing their Bitcoin, they are using what is called level 1 inputs. This means they are using unadjusted quoted prices from active markets. This is the most straightforward way to value something like Bitcoin, as its price is readily available from multiple exchanges. The fact that they are using level 1 means they are not having to make a lot of guesses or use complicated models. which is good for transparency. Looking specifically at the quarter ending the 30th of June 2026, the trust net asset value dropped by over 18%. This was driven by a roughly 13% drop in Bitcoin's price during that same period. The NAV per share fell from about $38.62 to $33.48. The filing mentions the sponsor's fee, which is a small percentage of the trust's assets, also contributed to this slight difference in percentage decrease. Over the first 6 months of 2026, the trust saw an even bigger decline, with its net asset value dropping by about 35%. Bitcoin's price during this time fell around 32%. The NAV per share went from about $49.61 at the start of the year down to $33.48 by the end of June. The sponsor's fee is noted as a small drag on performance, but the main story here is the drastic price movement of Bitcoin. Now, the report also details the risks involved. Under risk factors, it really hammers home the extreme volatility of digital assets like Bitcoin. It points out that Bitcoin's price has seen massive swings, mentioning a drop of over 50% from its October 2025 peak to June 2026. This volatility means the value of the shares can drop dramatically and quickly, potentially losing all their value. This statement is repeated throughout the risk factors because it is the most critical point. They are saying flat out that Bitcoin's price is unpredictable and could keep falling sharply. This is not just a theoretical risk. The report details past major drawdowns and recent events like the October 2025 flash crash and large quarterly outflows from Bitcoin ETFs. Another major risk highlighted is the ongoing regulatory uncertainty. The filing mentions the possibility of Bitcoin being classified as a security by regulators. If that happens, it could create huge legal problems and expenses for the trust and might even force it to shut down. They mention the SEC stance classifying Bitcoin as a digital commodity as of March 2026, but emphasize that this could change and regulatory landscapes are always evolving. Looking at the share activity for the quarter ending the 30th of June 2026, a substantial number of shares were redeemed. In total, over 187 million shares were redeemed. The average price paid per share for these redemptions fluctuated, with the highest average price in April and the lowest in June. Reflecting the price drop during the quarter, this shows investors were cashing out as the value declined. Finally, the report lists all the exhibits which are supporting documents. These include agreements like the trust agreement and various service provider agreements, like the one with Coinbase for custody services. These are the backbone of how the trust operates. So, what is the big takeaway here? The iShares Bitcoin Trust ETF is directly tied to the fortunes of Bitcoin. When Bitcoin's price surges, the trust's value skyrockets. But as this report shows, when Bitcoin's price plummets, the trust suffers significant losses, both in the value of its holdings and in realized losses when investors redeem their shares. The regulatory uncertainty surrounding digital assets is also a major shadow hanging over the trust. While the report from June 2026 paints a picture of sharp declines in investor outflows, the recent news headlines from August 2026 suggest some potential renewed interest or a rebound. However, the core risks of extreme volatility and regulatory shifts remain very much in play. The biggest concern I have is how the trust navigates these wild price swings and the ever-changing regulatory environment. It is a high-stakes game, and this report provides a clear view of the current score. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.